This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago. And today we're looking at the grain markets. Let's start looking at December corn. Finally, something to get excited about for this bull camp after being just kind of held down underwater for the past several weeks, really since the past USDA report where we really broke down. And speaking of that breakdown point of the USDA report, I think that's going to be a significant technical level going forward. So key technical resistance that we're looking at, 366 to 368. That is the breakdown point from the USDA report as well as the 50-day moving average. If the bulls are able to close out above 350 to 355, I think that spurs another round of short covering up to that pocket. But from there, I think it's a coin flip, and I wouldn't be surprised to see sellers step back in at a potentially better price. Now, looking at some other things going on in the corn market, we obviously have harvest picking up. We know that a big crop has continued to get bigger here recently, so we wouldn't be surprised to see that keep a lid on a significant rally as well. Also note that tomorrow is options expiration for Friday, so that could be playing a little bit of a role in the price action here today. Now, moving over to the soybean market, also something to jump up and down about if you're a bull. We've been talking about this in our research that we put out to clients every single morning. A breakout or a close above 826 and a quarter yesterday really encourage the follow-through short covering that we're seeing today and pressing us right back up against the top end of the recent range, which comes in 850 to 853. I think this is an opportunity to lighten up some things if you were able to buy the bottom end of the recent range. However, if we do close out above here to round out the week, potentially that spurs additional short covering. The next line in the sand for us comes in at 865. Now, wrapping things up with the wheat market, wheat really lagging today behind corn and beans, which should be a big caution flag if you want to be this long this market. Significant technical resistance, 523 to 525, represents a key Fibonacci retracement level on the year as well as a 200-day moving average, and would also mark lower highs. Lower highs and lower lows has been the trend over the last month and a half, and we continue to believe that is going to play out yet again. So if the bears can defend top end resistance here, we wouldn't be surprised to see additional long liquidation from the funds take us back closer towards that 490 to 497 level. So that's what we're looking at to wrap up the week. That's what you should be looking at too. It's been Oliver Slope with Blue Line Futures from the floor of the CME.